Okay, so about a week ago, I made my first ever investment into Walmart stock, which of course needs zero introduction. But in this video, I'm going to be telling you why I did that and why I'm going to be building a pretty large position in this company over time. But before I do all of that, all I kindly ask for you to do is like this video and subscribe to the channel if you haven't already. You guys have no idea how much this actually helps me as a creator, so that would be greatly appreciated. Other than that, let's dive straight into the video. Okay, so just like I do with all the stocks that I talk about in my videos that I'm actually buying, let's jump into a quick overview of Walmart stock. So of course the first thing to note is the ticker is WMT, which stands for Walmart. It was founded in 1962 by Sam Walton, so this company has been around a very long time, and of course it has. It's one of the biggest companies in America. Its sector is consumer services. Its current price, filming this on the 19th of May, is $141.91. The all-time high of this stock is $151.60 with a market cap of $399.2 billion. And of course, for those that don't know, its main services are its large army of retail stores and its newly developed e-commerce platform. So that is the overview of Walmart stock. Very basic, I know. Let's now jump straight into three main reasons as to why I am very confident about this stock going forward and why I am investing into it quite a lot over the next couple of years. And I guess let's start off with the latest news, and that is Walmart has just reported their Q1 earnings, and it's safe to say they were pretty impressive. When it comes to revenue, they beat the expected amount of $131.97 billion by reporting actual revenue of $138.91 billion, and they also revealed their earnings per share beat of $1.69 per share over the $1.21 that was expected. Now, of course, when any company beats their earnings estimates, it's always a good sign. But the thing about Walmart is that they have been consistently doing this for years, as this chart shows, and I can only point out a couple of times where they actually missed their revenue earnings. And when I say missed, every time it was by an extremely narrow margin. So what does this tell me about a company that I'm holding for the long term? Well, number one is consistency. I know for a fact I'm investing into a solid business that is ran extremely well. And I know for Walmart that pretty much goes without saying, given its track record and where it is today. But as a long-term investor, I know that given its past performance, this business has learned to adapt to changing times, survive economic crashes, and the most important thing, it has managed to innovate to continue to grow along with the changing times that we have. And for me, that is such a big plus. Just going back to the earnings call, another thing that I found was really interesting and very positive was that CFO Brett Briggs said the company was seeing pent-up demand coming out from the pandemic and expects that to continue going forward, which is of course also positive news for their retail sales. But one thing we can't forget also is that their e-commerce sales has very much carried them over the past year, but we'll get to that in a second. Alright, so the next reason why I'll be building a good position in Walmart stock over the next couple of years is not only this is a great stock to own during a booming economy, it's also a brilliant stock to own during a bad one, with it actually being hailed as one of the best recession-proof stocks to own. For example, if we take a look at this chart from the last major recession we had, you can see that Walmart provides continuous revenue growth year on year between the main years of that recession, with 2007 showing 10% growth, 2008 showing 9% growth, and then 2009 showing 7% growth. And when you think about it, while some companies may never ever survive a recession, Walmart only ever seems to grow and become stronger. And that also only goes to show when you actually take a look at the stock performance during these years as well. Just taking a look at this chart here, you can see between January 2008 and January 2009, the S&P 500 dropped over 56%, whereas Walmart actually gained just over a percentage. And the answer is simple, guys. No matter how poor or rich you are, what type of economy we are currently living in, you still need to eat and your family still need to be fed, and Walmart provides everything you need to be able to achieve that. Okay, so reason number 3 as to why I'm going to be investing into Walmart stock is going to be all about e-commerce. And I have quite a bit to say on this. And to be frank, I think Walmart is absolutely smashing it. And this can be shown again by their recent Q1 earnings report, where they mentioned that e-commerce sales rose by 37%, even with consumers returning to the more typical patterns as of late. So why do I think Walmart's e-commerce strategy is winning? Well, number one, they are absolutely smashing the omni-channel retail strategy, which is something I think has actually quite surprised a few people over the past year. And for those that don't know what omni-channel means, it basically means being able to offer many different solutions or channels to selling the same product. For example, if you wanted to buy a product from eBay, you can only buy it from the eBay website, of course. But with Walmart, let's say you wanted to do your weekly shop, let's say, you can now either get it delivered to you by ordering online, you can also order online and pick it up from the store, or you can just go to the store and buy it as you would have done before the e-commerce boom. This is omni-channel retail, and it seems to be the winning solution right now. The second reason as to why I think Walmart is smashing the e-commerce side of things is that people always want the best value for money over everything else. And as you can see from this chart, the best value for money option came out on top at 66% over everything else. And you only have to look at Walmart's slogan that says "Save money, live better" to know that they are going to absolutely dominate this space. Amazon, in my opinion, completely dominate the space when it comes to convenience, but when it comes to value for money, sometimes Amazon do charge a little bit more for that convenience, and this is an area where I think Walmart can really take advantage of and take a lot of that market share away. Now, the third reason on the e-commerce side of things, and this is almost coming from an insider information that I have, or let's say learning from my own personal experiences, and that is I believe Walmart is an absolute sleeping beast and is ready for a large piece of Amazon's market share, like I did just mention, but that is from a customer side. What I'm talking about is a third-party seller side. Now hear me out on this. I am not saying for 1 second I think Walmart is going to cripple Amazon to the ground. Of course not. But one thing you may not know, besides running this YouTube channel, I actually run an Amazon business, and where Amazon do make a large amount of their money is through their third-party seller platform, which I mentioned. And one thing you may or may not be aware of is that Amazon have an absolutely ridiculous policy for third-party sellers on their platform, where people just get banned, suspended for literally doing nothing. But the problem with us third-party sellers is that we don't really have anywhere else to go that offers the same amount of traffic and the same amount of distribution that Amazon actually offers for our products. And it's almost gotten to the point where Amazon has full control of us and our business. However, now steps in Walmart with their prime competitor in Walmart Plus. Sellers now have an alternative place to go and no longer feel forced to sell on just one platform, with Walmart's marketplace actually growing over 70,000 sellers in 2020 alone. Now, I know this is way off the millions that Amazon boasts, but let me tell you, if the opportunity comes to me to jump on that in the UK, because it's currently not available in the UK at the moment, you will not need to ask me twice. So yeah, as a whole, the e-commerce side of things I am very, very optimistic about. I actually have about another 5 great reasons on the e-com side of things, but I wanted to keep this video as condensed as possible. What I want to do now is actually move on to my buying strategy for this stock over the next few years, and I have to say, it's pretty simple. I'm not going to be going all in on this stock, but it's definitely going to be something that I'm just going to consistently add to every single month. Even if it's just 1 or 2 shares, I'm pretty much going to treat this one like an index fund. Just get my money in, not focus too much on the price, and just dollar cost average it over a long period of time. And over time, given its past performance, as you should see in this chart, I should see some really nice gains. But of course, all of this is just my own opinion and it should not be taken as financial advice. But having said that, if you did find some value from this video and you are still here watching it, it would mean a lot if you left a like on this video or maybe drop me a comment down below. Of course, subscribe if you haven't already, and I will catch you guys in the next one.